Hey guys, so if you have been watching the news, you know that at risk for a stock market crash, Warren Buffett and Michael Burry are essentially betting against the S&P 500. And I personally am curious of how it can impact real estate investing for my own investments and my clients' investments. And so it's kind of something that we want to pick apart today. And we're going to talk about two articles briefly and have a great discussion and give you something to think about and maybe, send us your thoughts on the matter. So the first article that we're going over is Markets Insider. Warren Buffett, like I said, and Michael Burry are ready and waiting for the stock market to crash. And then Robert Kiyosaki, which is a known real estate mogul. He's the writer of Rich Dad Poor Dad. Kind of has his own opinions about the matter. Everyone, I feel like, kind of follows Warren Buffett when it comes to investing, and so there's been just a lot of talk over the last 2 weeks about a possible stock market crash, and Warren Buffett tends to believe that, I mean, not Warren Buffett, Robert Kiyosaki tends to believe that it's not really going to hurt real estate, that real estate is a tried and true investment. It's a long-term investment. Your money is a lot safer in real estate, and so it's kind of interesting to see the two different plays on the situation. David, what are your thoughts about this?
Well, anytime you have guys like Warren Buffett and Michael Burry stockpiling cash and just sitting on the sidelines waiting to pounce on the market, it makes you pause and think, my goodness, what is coming down the pipeline? And so, as we have been reviewing the real estate market, it's, a crazy time where the prices had gone up so dramatically, and then we had a correction as interest rates increased, but the correction hasn't been that significant. And in some of our other reviews, we've talked about how there's been a little bit of a rebound, right? So prices have come down, but now they've started to come back up again. And so it makes me wonder how a potential stock market crash, like if we saw a significant crash in the market, between 10 and 20%, maybe even more, like what kind of impact would that have on the real estate market? And so I know we dug into another article to sort of learn a little bit more about that.
Yeah, so I mean, initially, just kind of wondering how the stock market and real estate market impact each other. Really, they're not tied together. So the stock market and the real estate market are two completely different markets, and they aren't tied together. But as you may understand, like they could easily be correlated. You could, if you think about a lot of the investors in real estate, they probably also have a lot of money in the stock market and vice versa. And so if a lot of the big investors in the stock market lose big, right, then they might have to figure out something with their real estate. So I could see that correlation being negative, but we found an article that kind of discusses how drops in the stock market affect real estate. And pretty much what the article said, it breaks down the S&P 500. If it's down 10 to 15%, this article is essentially stating that the that real estate will increase a little bit. And the reason being is that people know that their money, that real estate's just a little bit safer than the stock market. It's more of a long-term play. And so this article is saying that if the S&P 500 drops 10 to 15%, you may just see even a 1 to 2% increase on top of the natural appreciation, which is typically 3% year over year. So if the stock market drops a little bit, that's actually good for us as real estate investors because more people want to put money into real estate versus stocks. And so as we know, in the past couple of years, the more money in real estate, the higher home prices go. And then when the S&P 500 drops by 15 to 20%, this is the sweet spot. And you are going to again see a little bit more activity in real estate. More people are going to trust in it. But as you get closer to the 20% drop and greater, then we start to lead towards a recession, which obviously is going to negatively impact the real estate market. So Long story short, as long as we don't go, as long as the stock market doesn't drop greater than 20%, then real estate's fairly safe. And then I would even add, if you're investing smart and you're buying long-term investments, then even if we do hit a recession, as long as you're able to keep that property and still make the numbers work, long term, you're going to come out of it pretty much unscathed as long as you're buying smart investment.
Warren Buffett, Michael Burry, they're stockpiling cash, waiting to pounce, but not necessarily waiting to pounce on real estate. They're waiting to pounce on opportunities in the stock market to buy value and to buy companies that are depressed and that they could go in and buy as they recover. So I don't want to mislead people that it's that this article in what is the article? This is Market Insider, and we'll link to the article here in the show notes. So if you want to check it out, go down in the show notes. But their article isn't saying that Warren Buffett and Michael Burry are waiting to pounce on real estate investments. They're waiting to pounce on the stock market as it potentially declines. The other article is referring to, hey, when you do have a significant decline in the stock market, then investors retreat to real estate. So real estate is looked at as a safe haven for capital in uncertainty and uncertain times in the stock market. And so I think that's why you get the bump. But if the decrease in the stock market is so great, it probably means that we're in a recession. And regardless of where you're investing your money, it's going to be hard to keep that value up. But what the benefit to real estate is like you pointed out, if we're buying smart, meaning we're buying cash flowing rental property, we have adequate reserves, and we have fixed rate debt, then that's buying smart, and you can weather any storm, and eventually the real estate value is going to come back up. So those are my thoughts.
Yeah, and I mean, David and I were talking before we hopped on for this discussion, but just kind of how it's a little scary. Like, that's life though. Like
It's tough to
we
know what's going on. I mean, we're talking about this on a daily basis. I can't imagine being just a normal investor that maybe isn't in the weeds as much as we are. And we still have so much to learn as we dig into these articles and review the market. It's like, man, there's so much data and oftentimes conflicting data, and it's hard to make sense of it all, let alone when you have big names like these guys that are just sort of sitting on cash waiting for something big to happen. Makes you wonder what's coming down the pipeline.
Yeah, and Michael Burry, he actually hedged against the S&P 500. So he hedged a bet, essentially a bet, $1.6 billion against the stock market. And this was like 2 days ago from when we're recording this. And it's like, okay, like I
And
just got chills. Like, you
and
don't know
for
what's going to happen.
and for one of those, for those out there that aren't familiar with Michael Burry, he's the guy that's well known for shorting the market back in the 2008 recession in the real estate market. And he made a ridiculous amount of money really betting against the real estate market during that time.
Yeah. And I mean, just back to what we always say. I mean, make sure that your numbers pencil out. Make sure you're buying smart investments, whether that's real estate investments or you're investing in the stock market. So just be due diligent, do your research, and just know that like no one knows what's going to happen. No one has a crystal ball. Like the stock market may not crash. Like that's a possibility, right? It may crash. The real estate market may grow as the stock market crashes. You just really don't know what's going to happen. And so put yourself in a good position. Every single investment you make, put yourself in a better position than you are previously. That's it for today. For more daily investing tips and real estate secrets, make sure to visit breakfreerealestate.com and make sure to like, subscribe, and share our podcast. We will see you tomorrow.